Hey everybody, PJ back with another Watch Trading Academy YouTube video. Now today, children, we're going to be talking about the power of investing in watches. Now, one of the biggest arguments in the entire world right now happening between watch traders, investors everywhere, is, are watches good investments? Historically, you may have heard a lot of people have opinions on this. Now, if you watch any of my ads on Facebook, YouTube, or anything, you may have even seen my particular interview where Kevin O'Leary endorsed Watch Trading Academy, but more importantly, actually said how watches in general have been one of his best asset class investments. Yet, many people continue to argue online, are watches truly good investments or are they not? I mean, we can see here, and I'm going to show you here basically, that even individuals right here, like Roman Sharmov, which is very well known in the world of watches, has said repeatedly in many other videos that watches aren't typically a good investment. In other cases, we see other veterans of the watch industry in the vintage world, like I'm showing you here again, have said once again that watches historically are not good investments, and they've been in the business 20 plus years. So the question is, why would I, Pejman Ghadimi, someone who founded Watch Trading Academy, actually tell you that watches are incredible investments? And why would Kevin O'Leary agree with me? So today we're going to talk about why do both sides of the equations have different opinions, and more importantly, we're going to talk a little bit about my background as it pertains to investments, because we all share a very different background. Now, many of you follow me on the Exotic Car Hacks channel, so you know, because you've been following me for a while, that exotic cars and watches have always been an asset class investment for me. In 2005, I founded the world's first fund, known as VIP Motoring, that enabled normal people to basically invest in cars and watches and art as an asset class investment. Something we have never seen before. Many people argued back then that this was crazy. Most cars depreciate. Watches just aren't going to bring a premium when they're used versus new. It doesn't make sense. Over the years, we've proven these theories untrue by having a very successful fund doing this. Even up until last year, we were still extremely profitable and helping our clients be profitable of the same thing. Now, this year marks the last year of us in business under that same fund, and next year we'll begin our new fund called the One-Off Investments Fund, which you can find at oneoffinvestments.com. The idea of investing in watches and cars is something that wouldn't make sense if you ask someone from 20 years ago what their thoughts were on watches and cars. We all know cars depreciate, we all know watches depreciate, and we all know that supply and demand commands a very big premium over another in the watch business. Now the question becomes, and the question really becomes, has the industry changed? Because many people today will still argue that information from 20 years ago is still as relevant today as it was back then. And I would argue that that is certainly not the case on any level. And in order to understand this, we must look at the car market first. Let's look at what it took back then to drive a Lamborghini. Let's look at the idea that Lamborghini made 25 SV vehicles back in the day, and today makes 800, 900 of each variation, and yet all sell out. So the question is, what has really occurred in the world that has made what we once knew as not an asset, rather a liability, into an asset? And the short answer for that is there is significantly more money and demand in the world today than there has ever been before. And many of these things that used to be known as luxuries have become some of the best vehicles to park money in than any other asset class management. So the question is, why are more people not paying attention to this? Well, reality is there's really two sides of the equation and two types of individuals in this world. There are jewelers who want to deny this very same idea. Now, why? When jewelers themselves buy watches, they historically buy them, park them in their own stores, and not even offer them for sale. If you look at many of jewelers' Instagrams today, they'll display watches saying not for sale. Now, you may wonder why. Because they understand that the historical data of the value of such watches will continuously trend up. There's enough data backing this now. A green dial Rolex Daytona, a Patek 5980, an open work skeleton, all have almost double, if not tripled in value from their MSRP over the last 1 year alone. So you sit there and ask yourself, how is something that has tripled in its value not an investment. Well, you would have bought it low, you would have kept the item, and today it would be worth more with no effort to sell it. Hundreds of people lined up to pay that premium. So the question is, how is that not an investment? In the terms of investing, you simply are putting money up, you're acquiring something, regardless that it's a stock or real estate or anything else, its value trends up. Now, why does real estate go up? Because the population increases. Why do watches go up? Because the population capable of buying those watches increases. It is the simplest concept in the world, yet jewelers deny it. Why do they do that? Well, because the jewelry business as a whole is built on the idea of consumerism. It is not built on the idea of investments. And jewelers simply don't like that. In today's market, jewelers actually hate that. Let me tell you why. Because jewelers rely heavily on you purchasing a watch, wearing this watch, and then upgrading that watch, which means bringing it back. If you were aware that a watch was an investment or something to do that would bring you more money, then you would make more money-driven calculations towards your enjoyment of such watches. And you would make these decisions from an investment standpoint rather than a consumer. Because a regular consumer would buy a watch, wear a watch, lose money on a watch, and trade it back in against a heavier watch, making the dealer and the jeweler multiple margins multiple times. However, in the quest for ensuring that people lack this knowledge, people will continuously fight the essence of the idea that watches are historically not good investments. However, if we look at the data historically of how watches have been discontinued, everything from the Rolex Hulk to the Batman to the Pepsis, and yes, there are supply and demand curvatures that create more so of a price hike or something, but many of these prices, we will argue, have never settled back down again over the last 5 years, giving us a sense that these are inflated numbers, but rather these are new market demand numbers. And so, as a result of that, very rarely in asset class management, because of the cost of the dollar and inflation, will you ever see an asset turn back down if it's not overinflated. So the question is, was it a bad investment to buy a Hulk for 9 and sell it for 20? Was it a predictable investment? That's another story. But was it a good investment? I would argue a 200% return over 2 years would be a very fair and excellent return, especially with such a lower dollar to play with. So you see, jewelers have hated the idea that others are talking about investing in watches because it takes away their core business model, which is to sell, buy back, resell, and sell again, circulating the same watches. The more likely you are to be educated about the field, the less likely you are to trade your watch in. This is no different than how long car dealers have fought us at Exotic Car Hacks. No difference than jewelers fight us at Watch Trading Academy. And this is something you need to know. Secondly, why would other people, such as veterans in the business over the last 25 years that are vintage or real Rolex traders or individuals that are in the trading business, have a problem with others calling investments into watches? Partially for the same reason that there's still an idiot out there that actually believes that the school system is the only way to be successful in the world. People hate change, and they don't like the idea that their business models are changing. Look at how hard the car industry fought AutoTrader. Look at how hard the watch industry fought Chrono24. The idea that people have access to information globally and have access to making educated decisions means that every jeweler, every trader, every person out there is now competing against an open globe of similar traders, even if they are not even in contact with one another. I could sell a watch and my consumers and my buyers could know all over the world what other people are buying these watches for, thanks to social media, thanks to these websites and so on and so forth. And so why would these people fight so hard the idea of investments? Because it would force them to basically give up their business model and force them to adapt. And as we all know, change is very difficult for a lot of people. So the number one way you fight change is by denying it. And that is the simplest concept as to why the two parties, watch traders from the old days and jewelers today, will continuously bash the idea that watches are investments. Now here I'm going to show you 5 watches. These are 5 graphics of historical values of these watches and the trends in the graphs, as you can see on my screen here, of various watches that have gone up or down in value. And you can see here that while some have gone down, they've gone way back up. Just like every other investment, no investment is guaranteed to continue trending up. And of course, you have to identify the winners from the losers. That does not change. What changes is the idea that mentally, you have to understand that watches are good investments. And regardless that people agree in the space or not, people fight in the space or not, or people deny in the space or not, there is money to be made in the space that people like it or not. And that you choose to follow the traditional, conventional way of thinking and say that information from 20 years ago should still be relevant today. That is your personal choice. However, people lie. Money doesn't, and data doesn't. And while people have opinions about why things are happening, they are still happening. I personally was never a Bitcoin fan, and I chose to never invest in Bitcoin. That was my personal decision. That was not an idea of believing or denying or fighting it. It was something from an idea of focus. However, it could not be denied on any level based on the data that an investment in Bitcoin 5 years ago would have made you a fortune today. A fortune. So the question is, regardless that I believed or not, regardless that I invested or not, is the investment a bad investment if that fortune would have been made based on the data of where it was and where it is today? And regardless of my take onto the participation in that, I cannot deny, regardless that I enjoy investing or not in such things, that the data doesn't lie. And the same can be said for every watch out there. And so one of the key things you have to understand about watch trading is that while the majority of people out there may have a big problem with Watch Trading Academy not only teaching you how to trade watches, but teaching you how to invest in watches, I believe heavily in the idea that people who have conventional thinking typically stay in conventional boxes and ultimately never take hold of opportunities. The same way that people who pioneer change and people who get ahead of it typically are the first adopters of something new. With so much more money in the world, so much more supply in the world, and so much more opportunity to make money in the world, there is therefore a huge opportunity to invest in watches. And if anyone can show me any data that proves otherwise, then I'll gladly watch it. So let me know your thoughts in the comments here below. Do you believe that watches are investments? And why do you believe jewelers are fighting so hard to keep this information from getting out there? So let me know, subscribe, like the video, give me your thoughts. Let's have an open discussion about this because I think it's just getting tiring how so many people in the market are constantly talking about watches are not good investments. But yet, I always say this, if they weren't, how did I make so much money today? That's another question, right? I mean, look at their personal lifestyle. Look at my lifestyle. I went the unconventional route. My lifestyle over precedes theirs 10x, 15x, 30x. So sometimes, just like someone who invested in Bitcoin at $10, now it's 50 grand, that lifestyle is going to over precede everyone else who has not made that investment. So sometimes investing in things can sound scary, or sometimes it can be a change in how we see things. But we all accepted that the school system isn't the only way to be successful. So can we all accept that watches are perhaps investments, even if not everyone is investing in them? Subscribe, like the video, and I'll catch you on the next one.